What's up, Team Tackle? Coach Matt here. We got a very important CPI report here today to talk about. We got tariffs all over in the headlines between the U.S. and China, Mexico and the United States. We're going to get into all of it, plus a little bit of Meta going absolutely nuclear on AI build out. That's going to be an interesting story. It's happening right now. And don't forget, this coming Monday, Tackle 25 is the next webinar in our virtual conference. It's on covered calls. We're going to talk about cash flow covered calls, awesome stocks, and ultimately compounding those as well. If you want to learn how to do that, hit that link in the description below and let's get into it and tackle today. When you're looking at the stories today, a lot of macro stories in the market today, and that was kind of to be expected, as today was that very important CPI report that came out in the market, and some pretty good data coming out on the CPI report. Month over month came in at 0.1, expectation was 0.3. CPI came in at 0.1, expectation 0.2. You also had the year over year, which is really kind of that headline number. That came in at 2.4 versus the expectation of 2.5. And it really set the tone this week for a bullish move on the CPI report, given the fact that you had a pretty elevated expectation. We talked about this with the team yesterday. The bar was set for the bulls. If you got a fairly decent report here today, and that's exactly what did transpire. Let's talk about the technical side of the equation here. As the market broke out last week of that 6,000 level, it's been a fading price action since then. Haven't really seen any power moves, but constant constant increases in support. And even on today's CPI report, let's go in and let's kind of look at the price action here from an intraday perspective. The market's kind of underneath that ultimate resistance level that was established yesterday, and we're talking intraday wise, because there's just not a lot of resistance between that 6,000 level and all the way up to the 6,200 level. And so you're working a little bit of a pocket here. And so when you're looking at the intraday side of the equation, CPI reports right here. On that CPI report that missed, markets scream up on that breakout following the CPI report. And this is something to just kind of keep in mind when it comes to these major reports. And what I want to look at very quickly is just kind of that 1 minute chart to show you the aggressiveness of the volatility. You get that power move on the top side. This is all done from an algorithm response perspective. Very difficult to catch that type of price action. And so what we do at Tackle Trading is we talk about secondary setups quite a bit, because those initial setups oftentimes get driven through algorithms, and those algorithms are extremely fast. But then you get alleviation events, and what happens on a lot of these really important secondary patterns, or following that initial response by the market, is you really want to look at what's called the secondary pattern. You immediately get into that overextension conversation. For example, in technical analysis, it works 1, 2, 3. 1, you break out. 2, you get overextended. 3, you retrace. That's kind of the hallmark of a trend, whether you're talking intraday, daily, weekly, monthly. That's the pattern that you really kind of look for. On an economic report where the entire market is focused on it, that extension can get very fast. And as we just determined, you got extended in the first 1 minute. The next 10 minutes was just trying to work out that extension before you started doing the eventual pullback. And so what I like to do on these types of reports is, on that initial move, you're going to be a little bit hesitant because of the speed of that move, quite frankly. But then the secondary pattern, whether it's a high base clean pattern, or as we saw here on the pullback situation, you're going to be looking at through the secondary lens. And so you come back down to that 5 minute chart, you get that pullback coming down, get that pullback coming down. And where does it eventually end on that pullback? Right where the saga started beginning. And so you broke up, retraced all the way back down before you started recovering. And once you start recovering, you can start to see the patterns develop here. And as a trader, you would be like, oh, let me get it at the very, very low point. But that's not how trading works. You see this candle right here, the 7 o'clock candle, 30 minutes after the market got that CPI report. Well, what do we see? Well, excuse me, an hour after we got that CPI report, what do we see? We see that consolidation, break back up, And that's that tradable signal. So sometimes it takes a little bit of patience to allow this data to work out, quite frankly. And a lot of it is understanding the importance of the event, how many eyes are going to be on that, but also understanding the algorithm moving it initially. Very tough to catch. Talking about those secondary setups. We're going to move on here, but I just wanted to kind of bring that up and show you the highlights of that CPI report that did come in as a miss here today. Now, specifically on that headline number, the miss really kind of came from two areas of the market. Number one, weakness in energy. Not sure that's going to continue for the next CPI report. We'll talk about that here in just 1 second. And you also had some weakness in used vehicles. You had some weakness on the service side of the equation. That kind of brought that into 2.4%. Let's move on. Let's talk about some of those other stories here today. Couple news stories on the trade tariff side of the equation. Number one, President Trump announces a U.S.-China deal. Now, that framework is very similar to the framework that we got out of Geneva a couple weeks ago. So not major movements we're seeing on the tariff side of the equation regarding the U.S.-China deal, because it's really just a reiteration of what they agreed to in Geneva with a little bit more bite. For example, when you're looking at the framework in Geneva, basically it was all about rare earth minerals, and it was all about chip curbs and all of that. Well, what we've seen in the last 2 weeks is the U.S. do more chip curbs and China really not deliver on the rare earth minerals. And so they put a little bit more bite. President Trump declared it as done. We'll see if that's actually done as we do move forward, because there's a lot to negotiate with China, a tremendous amount to negotiate with China. So regarding this phase of it, it might be done, but I would expect further negotiations with China. As of right now, we got 55% tariffs coming on China, 10% Chinese tariffs on U.S. goods and services. And so we'll see if that negotiates to the downside over time. Again, when you're looking at the price action here today, I'm not sure the ES and the market's getting a lot of love from that tariff news, but what is getting a lot of love from that tariff news is crude oil. We did a big deep dive on energy yesterday, crude oil yesterday at Tackle Trading. In our pro membership, we hang out in the Traders Lounge every single day in Discord. And yesterday, one of the topics that came up was energy, and specifically because what was happening with crude oil on the breakout of the reversal, working into that 200-day moving average. And so just attack, we found quite a bit of great looking stocks on the energy side of the equation. As crude oil continues to do what it has been doing in the last week and a half, that's going to look even better and better and better in my estimation. Let's move on. Let's talk a little bit about Meta today, as the news coming out of Meta is more on the AI side of the equation. And basically Zuckerberg is basically saying, all right, whatever the cost, whatever we need to do, whatever, we need to win the race to AGI, artificial general intelligence, the super intelligence that is the entire race that NVIDIA and Meta and Microsoft and Google and all these hyperscalers spending hundreds of billions of dollars. Well, Meta comes in and says, you know what? We're going to spend $14 billion. We're going to bring in all the greatest minds out there, and we are going to put this race to AGI on some steroids, as they put $14 billion into the market. Now, when you are looking at Meta here, a little bit overextended coming into that very important all-time high, you would certainly be looking at it from a secondary pattern perspective as well. But interesting, very interesting news coming out of Meta here today. GM still in the news, as well as obviously tariffs, and what's happening there is Mexico and the U.S. are agreeing to remove some of those Mexican tariffs that are on still. And so they're reverting back to the original trade war agreement number one back in 2018, and they're reducing their tariffs on those steel companies. Now, those steel companies got a big bump up just a couple weeks ago when Trump announced that 50% tariff that is coming out of the market here today. And as you're seeing, you see Nucor coming down here a little bit, Steel Dynamics coming down here a little bit, giving up what they gapped up. We talked about that on the gap up on that day in this morning action at Tackle Trading. We talked about it in detail, and the evaluation was basically this: it's a sensitive area that is going to be an ongoing negotiation that the 50% tariff is most likely not going to sustain. And that's exactly what we're seeing play out here. Sometimes you got to read kind of the real stories versus kind of all the fluff out there. And there is a lot of it in the market, no doubt about that. So when you're looking at those steel companies today, just kind of a nothing burger in my estimation in general. And that's what we got for the tackle today here today. Well, that's morning action, excuse me. If you are ready to come join us in the Tackle 25 webinar next week, we're going to have a tremendous amount of fun the same way we had in Master Trader this week. We talked a lot about technical analysis, trends, patterns, support, resistance, indicators, prepping trades, Elliott wave theory, Fibonacci, you name it. We talked about it. In our upcoming session, we got the Tackle 25 covered calls. Come join me on Monday so that you can learn how to bring in cash flow on those stocks that you own long-term, compound it to create a legacy for you and yours. We're going to do that next Monday. Hope to see you there, and I hope you enjoyed the video here today.